Man, oh man, you've got yen continue to climb against the USD, sitting really close to 160. We saw it pull back yesterday a little bit, but we are back up again today with oil continue to rise, priced in yen, around $17,000. A little bit earlier this evening, we've pulled back a little bit to 15.5 here. I think that's a healthy pullback. I do think it will continue higher. I do think that there's going to be continual pressure on the Bank of Japan. They really only have three options at this point. So they're backed into a corner. They need the yen to appreciate against the dollar. And the ways that they can accomplish that are, one, they can start shorting oil, which if they do that and it produces a short squeeze and oil continues higher, they end up in a very, very bad spot. Second to that, they can start dumping U.S. Treasuries, right? If they're selling off U.S. Treasuries, that puts pressure on the dollar, increases the value of the yen against the dollar. That's another option. That also would basically make it imperative that we start launching stable coins here in the U.S. in order to be able to drive that demand domestically so that the Fed doesn't have to print money in order to buy those Treasuries. And the last thing they could do would be to raise interest rates, which is what I've been saying the whole time. That's what they need to do. They need to raise interest rates to about 1.5. They're currently at 75 basis points, or 75% of 1%. They've become very hawkish. They are saying they are going to raise rates. They're going to step in. If there's volatility in the FX market, they're going to do what they can to mitigate the risk for oil continue to rise because of the conflicts in the Middle East.